All right. Running a little bit late this morning, but that's okay. I've got a special announcement for you all. It is Tuesday, December 10th. I still have to look over there. I don't know why. Tuesday, December 10th, and it is almost 8 o'clock, 7:53, so we are probably half hour behind schedule, but I've been getting things prepared. So this is the Zero DTE market analysis. We do this every morning where we look at our assessment of where the market is. We're looking at volatility, market direction, and any entry events that we're anticipating happening by looking at the market structure using volume profile. So this is a service that I provide every morning, and this is really meant for my coaching clients. I will put this into our Discord and our coaching group, and we will discuss all these parameters and get ready for the day and go through all of our routines and so forth. But what I want to announce is that what was the thing that most of those coaching clients, or all of those coaching clients, went through before they became coaching clients, and they typically bought a course that would show essentially what our strategy is and our process and methods. And then from there, they decided that they wanted to take the next step. So I have a new version of that first lead-in product, which is a standalone thing, and it really shows you everything about what we do, our strategy, methods, process, and it's called the Zero DTE Academy. And I can give you a brief view of that. There's a very new version of it that we're putting up on the school environment. So it will be like a classroom, and it will have a whole bunch of features, including a full-fledged course and work materials, as well as weekly live updates. And so it's a really great environment for you to learn the Zero DTE method and options trading in general. So let me see if I can bring that up and show you what that looks like. There will be a link below so that you can join this. Here it is. Here's the Zero DTE Academy. It's only $35 a month. We have another similar academy that is for our old service, and there's lots and lots of people in there. So this is brand new with new material, everything. So I think that you'll find this extremely inviting and exciting. So I would recommend that you go and check that out. All right. All right. So let's get back to the analysis. Let's go over to our first screen, and we need to look at, as I said, volatility, price direction, and then market structure. So yesterday we had a move down in the market that was probably one of the biggest moves that we've seen in maybe or corrections in even though it wasn't a big move, but it was probably within the last 45 days, 2 months, something like that. And so volatility went up a little bit, but not that much. You know, yesterday we were at about 13.5 on the VIX. Today we're at a little over 14. So not much has changed. We're still looking at relatively narrow flies and possible multi-day strategies. In fact, I have a strategy on for expiration today and tomorrow. Although with the move down, they seem to be a little bit out of range now. Although I spent very little money on them, and there's a very good possibility that the market might recover over the next couple of days and move up into those. So we'll see what happens. All right. So there's our volatility situation. We have our width and possible multi-day trades coming into play. Let's take a look at the market direction, which is, you know, I look at this, and there are two ways that you can interpret where the trend is going with the moving average, because that's typically how we do it. Now, one way that I use is to look at whether the current price is either above or below the moving average. And here I'm using the hull with a 21-day period. Some of our members like to use a 14-day period to be a little bit more responsive. And some people, instead of using above or below the average, might use the slope of the average. So in the case of using the slope, you can clearly see that it's still pointing up, so that those people would be choosing a bullish bias, and so they would be placing call flies above the market. My method is to look at either above or below the moving average, and so here you can clearly see that we closed below the moving average, so I would be looking at put flies. Now, one isn't better than the other. Essentially, we're trying to ultimately resolve to about a 50-50 being right. I would say that when you use my method, it might be a little bit more responsive to the market, but there are also a lot of false readings, where the other way is a little slower to the market, but probably not as many false readings. So they both average out, so it's totally personal preference. So for me anyways, I'm going to use my method, which is below, because I want to stay consistent, and I'm going to look at put flies this morning. All right, so that, for me, that means trend is starting to move down. And this is a kind of an edge case where we could be just consolidating here too. And some people might want to use what we call our stochastic strategy selector, which is essentially like flipping a coin, but with a little bit more scientific swag involved in there, and might choose either call or put, so if we're in between. But in any case, that's where we are, and we're at all-time highs or near all-time highs, so typically the volume and liquidity are much lower, and so it's a time when, because the VIX is so low and everything, we just find that there's higher gamma risk, and so we take lesser chances, so we reduce our position sizes. And if it works out, great. If it doesn't, we lose small. That's the whole concept behind the way we trade with asymmetric risk to reward. All right, let's go on to the market structure. And as you can see, yesterday we did have a pullback, and there was, I would say, an event right here. So each one of these yellow lines are structural elements, and so you can see it. We pulled back to here and moved up, and so I guess there was a potential to make profit. I didn't personally take this trade yesterday. I put on multi-day trades. And I know that there are some members that did take this trade or put on multi-day trades, and that probably would have entered or resulted in a small profit, getting out as soon as the market started to turn around. All right, today we have to look at our entries. So from the market open 9:30 to the end of the trading session at 12:30. We're looking for pullbacks to one of these lines, and so I didn't draw these because I was trying to get that. There we go. So there and there. So potentially what we're looking for, we're not looking for pullbacks here. We're looking at, for me, I'm looking for a bearish position. So I'm going to be looking for something a little bit different. I will be looking for a move up into one of these structural levels and then a reversal. Right? Same with down here. And then looking for a put fly out of the money. Now, someone who's still bullish will look for the exact opposite. They'll be looking for a pull down here and up there. You might say, well, that doesn't sound very deterministic, Ernie. Well, trading isn't deterministic. It's really probabilities. Every day is like a new coin flip. All we can do is pick our direction, look at our market structure, find out the structural levels to see an event to take a trade, put on an asymmetric position and see how that works out, and then manage it if it goes into profit. And if it doesn't, then that's the defined risk that we take. So there you are. So we've got our directives. We have how big we're going to size ourselves, our directional bias, and our structural events based on volume profile. And we'll go back and look at that again next week or later this week. I just want to remind you about the Zero DTE Academy. Let's go back to that. And you'll find the link down below. Go to the Zero DTE Academy, join up there, and you're going to find a huge number of resources if you're looking to up your trading game and start trading like a professional, learn asymmetric risk to reward, and how to trade options in this type of environment or any type of environment. This is the place for you. It's really a fantastic resource. All right, you'll hear more about that in the coming weeks and months. Thank you very much. I hope you have a great day. Coach Ernie, out.